Welcome to the parabolic phase of the cycle. In today's video, we're going to be talking about what to expect going forward because we're seeing history repeat in front of our very eyes with some historic, momentous price action towards the upside. We're currently in price discovery, rallying to new all-time highs practically every single day. So let's talk about what to expect on this next journey in the parabolic phase of the cycle. Subscribe to the channel for more videos like this in the future. Like this video if you enjoy content like this going forward, and let's dive right into it. So we know that these green circles, they tend to represent the reaccumulation phases that occur around the old all-time high level, which are represented by these black horizontal lines across time. And of course, this has been one of the most extended reaccumulation ranges in history, especially if we look at very short reaccumulation periods like we saw in 2020 and 2013 especially. But perhaps this one is probably one of the most similar to what we saw right over here in this cycle. But of course, this was more of a sideways range, more of a rectangular one, whereas here we saw lots of zigzagging and not a lot of regularity in that consolidation. Nonetheless, we've broken to new all-time highs and price discovery. So if we just focus on some of these price discovery moments, what can we really expect from them? Because this is now week 2 in price discovery, whereas if we focus on this cycle in 2021, 1, 2, 3, 4, 5, 4 weeks, really. 4 weeks is how long we saw in terms of upside, uninterrupted upside, before we saw that very first pullback, that very first deeper pullback, right? So that's really important to take note of, because over here it took some 8 weeks in 2017. Uninterrupted upside for 8 weeks at a time before we saw that very first pullback moment. Really important to take note there. And in 2013, it took some 6 weeks before we saw a very deep pullback. So the key takeaway here is that we're currently in week 2 of price discovery. It took 4 weeks in 2021 to see that very first retrace. It took 8 weeks in 2017 to see that very first deeper retrace, and some 6 weeks or so before we saw that deep retrace first. So this is the very first price discovery wave. And if you want to read more about price discovery waves, check out my newsletter in a link in the description down below. Feel free to click there, because this is the first price discovery wave. We've seen price discovery waves in the past, but we always see a price discovery correction after those waves. And if this is week 2 and we've seen week 4 weeks here, 8 weeks here, and some 5-6 weeks here, this being week 2, we still might have a few more weeks of upside before we see any sort of interruption in the trend via a deeper retrace. And so during this first impulsive wave of multiple weeks at a time, we're going to only see very mild dips on the way to new highs. And that just simply is the case across time. We see very few moments for dips during these multiple week periods, and it's only on that first deep retrace where we have a great moment to dollar cost average on a discount. And if you focus, for example, on 2013, we break out and we have a very brief dip, and then we simply rally for the next weeks afterward. So there are going to be many opportunities in the future, but until then, we're not going to see a deep pullback for a few weeks. And in the meantime, we're going to see a lot of, maybe if we do get any dips, those are really for buying, but there aren't going to be many interruptions in the strong uptrend until in a few weeks' time, most likely. So if we're talking about the first price discovery wave, and then we talk about that first deeper correction, we then have the next price discovery wave after that correction. So that first correction, it just turns out to be a high probability retrace, which is very, very likely not the end of the bull run, not the beginning of a bear market. It's just a really great dollar cost averaging opportunity before we trend continue and resume the trend towards the upside. This, of course, was in the case in 2021. 2017, for example, right over here, price discovery wave to the upside, first correction, and then we recover from that correction. Of course, trend continuation into another correction because corrections are always going to be a part of the cycle. But we have to understand that that first correction is going to be absolutely high probability just being a retrace rather than the beginning of a bear market and the end of a bull market. And here as well, you can see that first retrace, high probability that it's not the beginning of a bear run. It's still a bull market, just a great discount. So in a nutshell, price discovery wave 1, it can last between 4 to 8 weeks at most, followed by your first deeper pullback, which lasts 3-4 weeks. It tends to last a few weeks as well. After then, trend continuation into price discovery wave number 2, which also lasts quite a few weeks. And then we see another correction. So 2021, right over here, we see a very deep second price discovery correction. And this can be quite a prolonged one. It can be quite a deep one, but still the probability favors that there'll be another price discovery wave towards the upside. If we go to 2017, this is the first price discovery wave, first corrective wave, second price discovery wave, second corrective wave. That's still a good chance that the bear market isn't still beginning. And then we see trend continuation from there towards the upside into another price discovery wave. And in fact, we have a bit of a pullback again. So 2017 offered quite a few price discovery uptrends as well as price discovery corrections. But in 2013, we get that first price discovery wave, first correction wave, and then we get only one last price discovery uptrend. So 2013 just gives us really very simple parameters here. One price discovery wave, one correction, and then the second price discovery wave, and then it's the bear market. So 2013 just showcases to us that one price discovery correction is a great opportunity, but two price discovery corrections, that is getting a little bit riskier, isn't it? But 2017 shows us that still a second price discovery correction can be a great way to dollar cost average into the market at a discount before we see another price discovery uptrend emerge from that. And 2021 also showcases us the same thing before we rally to new all-time highs as well. So the chances are that the second price discovery correction that we see, so price discovery uptrend now, then correction, then second price discovery uptrend, and then the second correction, that second correction, well, that's going to be a little bit riskier to be dollar cost averaging into, but still quite probable it wouldn't be the end of the bull market. It wouldn't be the beginning of a bear market. So really important to understand that that second price discovery correction, it's going to be riskier. It's going to be a riskier pullback, as we've seen in the past. And 2013 actually shows us that there is legitimate risk there, because that could actually be the beginning of a bear market by standards of 2013. But there is a chance that we can have two price discovery corrections in this cycle at least. But let's talk about what happens afterwards. Because in 2021, we saw the third price discovery rally to new all-time highs, but we didn't get that third price discovery correction, and that was the bear market. And if you were buying on that price discovery correction, you'd be buying into a bear market and you'd lose money over a period of 365 days all the way to the bear market bottom. So in this cycle, we got one price discovery uptrend, one price discovery correction, two price discovery uptrend, two price discovery correction, and then third price discovery uptrend. And that was it. So three price discovery uptrends and three price discovery corrections. What about 2017 here? Let's have a look. One price discovery uptrend, one price discovery correction, second price discovery uptrend, second price discovery correction, and then that's the third price discovery uptrend with a dip in the meantime. No third price discovery correction. And if you were to buy on this price discovery correction, thinking it's a price discovery correction before we rally up, you're buying into a bear market, buying into a downtrend that's going to last 360 days, 365 days until we bear market bottom. Don't buy into that third price discovery correction because there isn't one. That's the bear market. And 2013 shows us that we only get one price discovery correction. 2017 shows us that we get maybe two price discovery corrections and a dip. And 2020 shows us that we get two price discovery corrections and three price discovery uptrends. So the real takeaway here is that we're probably going to see the price discovery uptrend right now, the first price discovery correction in the future, the second price discovery uptrend in the future, maybe a second price discovery correction in the future, and then that final last price discovery uptrend into the bull market peak, and that's over. No more price discovery corrections. That would probably be the beginning of a bear market, the end of the bull market, and then we start 365 days of downtrending in the future. But we're still so early, aren't we? We're still so early. And if you're really interested in these price discovery uptrends and corrections and these price discovery phases, feel free to sign up to the Rekt Capital newsletter in the link in the description down below. Click that link because I've done extensive work on this. This is only a teaser because I've gone into so much more detail in the newsletter, and I'll be sharing more information on this concept because I find it fascinating. And most importantly, it's going to be extremely useful as we navigate price discovery and new all-time highs in the coming several months. So much more to enjoy, so much ahead of us, and let's navigate this market together because this phase, as you can see, dating back to 2013, that's 11 years really, and 1, 2, 3, 4. We've only been in this situation 4 times over the past 11 years, and that just highlights the magnitude of this opportunity that we have to make it count. We can't let this opportunity slip through our fingers. We have to navigate it properly with the right resources, with the right education, and we need to make the most of this cycle because we only see the parabolic phase in the cycle once every 4 years. And we haven't seen this in so long. We're finally here. Let's make it count. Let's make the most of it. Sign up to the Rekt Capital newsletter in the link in the description down below. Subscribe to this channel for more videos like this in the future. Thanks so much for tuning in. I'm Rekt Capital, and I'll speak to you in the next one. Speak to you soon.